Property prices in Korea have surged in recent years, especially since regulations on mortgage loans were loosened in 2014, leading to concerns over a bubble waiting to pop and of consumers overburdened by debt. The government's announced new measures today to get a grip on both of those problems. Soo-young reports.
The Korean government is cracking down on debt-filled property bubbles seen in some areas of the country. The government announced a new set of measures on Monday, targeting a total of 40 hotspots, which include districts in Seoul, Gyeonggi-do Province and the cities of Sejong and Busan. To reduce speculation, property owners and redevelopers in those areas will face tougher procedures in reselling and buying homes. Also, two major loan regulations have been tightened up in the designated areas. The loan-to-value ratio, which allowed up to 70% of a property's value to be financed through loans, will be lowered to 60% and 50% for the debt-to-income ratio. However, the previous rates will be maintained for low-income households and actual home buyers. The government has also decided to enforce the debt-to-income ratio on collective mortgages, which were granted without income screening as they're brokered en masse through construction companies selling off new properties. But will this be enough to cool down the overheating?
The caps on redevelopment and collective loans could lower investment from big-time property dealers. But inflated prices are unlikely to drop significantly as a result of the new policies, which are designed to curb excessive speculation.
Since mortgage rates were loosened in 2014, apartment prices and lump sum deposit rates have soared by more than 20% and over 50% respectively. Soaring property prices were reinforced by easy loans, which not only fueled real estate speculation, but also saddled numerous families with debt, in exchange for access to homes that they couldn't have otherwise afforded in areas like Gangnam and this district of Bundang. The annual growth of household debt has hit double digits since 2014, hitting over $1 trillion. Experts say to effectively rein in the housing market and household debt, the government must introduce a more efficient mortgage screening system, such as a debt service ratio, as well as increase monitoring of non-bank institutions that issue loans with high interest rates. Soo-young, Arirang News.